Imagine waking up one morning to find that the world's financial system has quietly shifted overnight, not in the hands of the banking giants or government agencies, but riding on the back of a once controversial digital asset, XRP. The headlines buzz with shock. Has Ripple's cryptocurrency truly dethroned the old guard, or is this just another crypto pipe dream? This isn't just a story about a coin, it's a story about a struggle for control over trillions in global payments, the future of money, and the clash between innovation and regulation. The real question, could XRP actually become the backbone of the world's next financial era? If you've heard of XRP, maybe it's because of the headlines, the years-long legal face-off with the U.S. Securities and Exchange Commission. Maybe it's because of the wild price swings or the passionate debates on social media. But behind the noise lies a movement stirring deep within the financial world, pressing at the foundation of how value moves across borders. Today, we break down the rise, the conflicts, and the game-changing possibilities surrounding XRP, why some believe it could be the new SWIFT for the digital age, and why others warn that the road ahead is anything but clear. Let's hit rewind. To understand XRP's moment in the spotlight, you first need to know how the world's money moves today, and why it's painfully ripe for disruption. For decades, the global financial plumbing has been dominated by SWIFT, a 50-year-old messaging network founded in Belgium used by over 11,000 banks. When you wire money overseas, from a Tokyo tech startup to a Berlin supplier or a New York family sending remittances back home, your funds don't actually teleport from one bank to another. Instead, SWIFT acts as the global postmaster, relaying instructions, verifying details, and keeping all the middlemen and fees in business. But here's the catch. SWIFT is slow, expensive, and opaque. International transactions can take days, often incurring hefty fees, especially painful for small businesses and families. Lost in translation between banks, currencies, and time zones, these payments are crying out for a 21st century upgrade. Enter Ripple Labs and their signature digital asset, XRP. Launched in 2012 by Chris Larsen and Jed McCaleb, Ripple had a bold vision. What if global payments could be instant, cheap, and truly borderless? Unlike Bitcoin, which was built as an alternative to fiat money, XRP was engineered as a bridge, a tool to connect the world's silos of value, allowing money to move as quickly as information does on the internet. Ripple didn't just stop at theory. Over the years, their RippleNet network has partnered with more than 100 financial institutions ranging from regional money transfer shops to major global banks. The core pitch? XRP and its underlying technology can replace the old system's patchwork of intermediaries. In Ripple's ideal world, a bank in India could settle with a counterpart in Spain nearly instantly, using XRP as a neutral middleman, no gatekeepers, no delays, and minimal costs. The technology behind XRP is also built for speed and efficiency. Where Bitcoin relies on energy-hungry mining and slow transaction confirmation, XRP uses a consensus mechanism, letting trusted validators, mostly banks and institutions, process transactions in seconds. All 100 billion XRP tokens were pre-mined at launch. No more coins will ever be created, a point that reassures some, while others worry about centralization. But this is where the story gets complicated, and frankly, a little thrilling. Ripple's ambitions quickly ran into a wall the size of Uncle Sam. In December 2020, the SEC accused Ripple Labs of conducting an unregistered securities offering, shining a harsh spotlight on XRP's status in the U.S. The lawsuit roiled markets and sent XRP's price into freefall. For years, the future of XRP in the U.S., the world's financial nerve center, was locked in limbo. Fast forward to 2023, and things started to turn. Judge Annalisa Torres ruled that XRP, when sold on secondary markets, is not a security, a precedent-setting decision that electrified the crypto world. Suddenly, hope flickered for not just XRP, but countless other tokens facing similar scrutiny. XRP's supporters cheered, but the legal battles weren't over just yet. In 2025, a proposed settlement between Ripple and the SEC hit a procedural snag, leaving everyone waiting for the next twist. Here's the emotional punch. For 4 long years, Ripple spent an estimated $150 million in legal defense. Hundreds of thousands of holders watched helplessly as governments and banks debated whether their digital future would be embraced or erased. For some, these were years of lost opportunity. For others, it was proof that the old financial system would fight to the last breath to protect its turf. Yet while the legal theater played out, Ripple was quietly building. They rolled out improvements to the XRP ledger, like the multi-purpose token, MPT standard, which could allow for complex assets and decentralized identity features. They acquired the prime brokerage firm Hidden Road for $1.25 billion, pressing deeper into the institutional fabric of finance. And perhaps most crucially, Ripple started brokering partnerships with central banks, helping develop pilots for central bank digital currencies, or CBDCs. France and the National Bank of Georgia joined the growing list of institutions experimenting on XRP's rails. What does all this mean? At the core, Ripple's strategy is to make XRP indispensable to the next generation of financial infrastructure. As more governments consider launching digital versions of their national currencies, someone, or something, will need to connect these islands together. XRP's supporters argue that only a neutral, borderless bridge asset can unlock the full promise of CBDCs, ensuring that value can move seamlessly across any currency, any border, any time of day. Eduardo Farina, CEO of Alpha Lions Academy, sums up the sentiment of many XRP advocates. Holding 10,000 XRP could lead to significant wealth if XRP reaches $100 or more, turning holders into millionaires, he declared. And he's not alone in his bullish vision. Analyst Matthew Brynan believes XRP could surge to between $100 and $1,000 within the next decade due to its utility in remittance payments and potential to disrupt traditional financial systems. But the optimism isn't universal. Dissenting voices like SEC Commissioner Caroline Crenshaw warn the SEC's settlement with Ripple undermines the court's order and raises more questions than it answers. And even among market analysts, the future remains uncertain. While Changelly projects XRP could reach $10.54 by 2030, Wallet Investor predicts a bearish scenario, seeing prices fall to $1.35 by 2025. Finder's panel, meanwhile, takes a more cautious approach, expecting XRP at $1.05 by the end of 2025 and $2.49 by 2030. And what about the competition? Swift isn't exactly standing still. The 50-year-old network is launching its own instant payment initiatives and adapting to the digital asset age. Banks, wary of disruption, are both embracing and hedging their bets on new technologies. Behind every partnership Ripple announces, there's often a competitor, a naysayer, or a regulatory hurdle lurking in the shadows. Still, the stakes are enormous. If Ripple can cement its role as the Swift of crypto, the price of XRP could rise dramatically, especially if adoption spreads to the world's largest banks and government-backed currencies. One former fund manager, Digital G, even speculated that XRP could exceed $15,000 per token if it were to completely overtake Swift's market share. But that's a big if, and the hurdles are formidable. Here we reach the crossroads, the main conflict shaping XRP's uncertain future. Legal clarity is tantalizingly close, but not fully achieved. Judge Torres's ruling gave hope, but procedural hiccups and regulatory uncertainty remain. Can Ripple keep winning in the courts, or will further complications arise? Meanwhile, adoption is growing but uneven. Some banks and central banks are piloting XRPL projects and CBDCs, but many remain cautious, wary of both technical risks and political implications. As governments tighten crypto regulation globally, could a new crackdown threaten everything Ripple has built? At the heart of the matter, the world is watching for a breakthrough. Can XRP truly replace SWIFT as the world's standard for cross-border payments? Or will it become another footnote in the long, winding history of financial disruption? As we move into the next part of our story, let's dig deeper into the obstacles and opportunities shaping XRP's journey. Will the coming regulatory decisions unleash a new financial revolution or slam the brakes on Ripple's bold ambitions? So, with the legal clouds finally starting to part and Ripple netting important victories in the U.S. courts, the stage is now set for the next act in XRP's journey. But what does this new legal clarity really change? And more importantly, what challenges and opportunities does XRP face as it attempts to leap from the crypto world into the heart of global finance? Let's dive into the high-stakes scenarios that lie ahead. First, the most immediate consequence of resolving the SEC lawsuit is the dawn of legal certainty. As of March 2025, the U.S. Securities and Exchange Commission has formally dropped its appeal against Ripple. This isn't just a win for Ripple, it's a milestone not achieved by most other cryptocurrencies. In a landscape where nearly every major crypto faces regulatory ambiguity, XRP now stands out as one of the few assets with a green light for institutional use in the world's largest economy. Stuart Alderoty, Ripple's chief legal officer, put it bluntly, The rejection of the settlement motion changes nothing about Ripple's wins. It was merely about procedural concerns. That's confidence you rarely see in crypto legal circles. But does legal clarity automatically mean open doors at every bank? Not quite. There are powerful headwinds. For decades, the SWIFT network has been the backbone of international payments, connecting over 11,000 banks in 200 countries. SWIFT is slow, expensive, and outdated, yet deeply entrenched, a Goliath, not easily toppled. SWIFT's inertia is more than technological. It's an institutional habit, a safety blanket for the old guard. Yet Ripple is undeterred. Its on-demand liquidity, or ODL, leverages XRP to bridge currencies in real time. No more waiting days for money to crawl across borders. No more hidden fees. Companies like Tranglo and even some major banks in Asia and the Middle East have piloted ODL, reporting settlement times that drop from days to seconds and fees reduced by over 60%. That's not just evolution, that's a revolution in motion. But here's the twist. While some banks are eager for these efficiencies, others are cautious or outright skeptical. Many worry about regulatory blowback, reputational risk, or simply fear losing control in a payments world suddenly moving faster than their internal risk committees can comprehend. And then, there's the geopolitical chessboard. Some nations, like France, Georgia, and the United Arab Emirates, have invited Ripple to help with central bank digital currency pilots. These early partnerships could turn into a domino effect, with one central bank's success driving adoption by others. Yet, in other regions, such as the US and China, policymakers remain wary of ceding any ground to a technology that could disrupt their monetary sovereignty or expose them to foreign influence. Analysts like Matthew Breenan see huge upside. XRP could surge to between $100 and $1,000 within the next decade due to its utility in remittance payments and potential to disrupt traditional financial systems. But that's a bet, not a guarantee. Finder's more conservative panel projects $1.05 by 2025 and $2.49 by 2030. In a world where fortunes are made and lost on volatility, such predictions fuel both wild optimism and grave caution. Let's be clear. If banks worldwide integrate XRP for cross-border flows, the demand for XRP could soar. Analyst Chad Steingraber boldly claims, given XRP's growth over the past 4 years, it could be trading at a much higher premium soon, potentially a 100x increase. But there's a catch. For XRP to become truly global, it needs more than hype. It needs ongoing trust, security, and a steady hand in regulatory compliance. Regulatory risk hasn't vanished. Watchdogs across the globe are drafting new rules. The European Union's MyCA framework, for example, adds layers of compliance. If new regulations demand tight controls or limit the use of bridge assets, XRP's road could become rocky once again. Even SEC Commissioner Caroline Crenshaw, despite the lawsuit's end, criticized the settlement for raising more questions than it answers. So, as the chess pieces move, the next possible checkmate is the rise of central bank digital currencies. Ripple has quietly been working with the National Bank of Georgia and responding to invitations from France and others, aiming to provide the technology backbone for new CBDCs. If major economies select the XRPL as their CBDC infrastructure, XRP could become the essential neutral bridge, connecting fiat systems worldwide. It's not just theory. The Dubai Land Department is launching a real estate tokenization project worth a staggering $16 billion on the XRPL. Major asset classes, not just currencies, are starting to flow onto the XRP ledger, opening up new frontiers in DeFi and real-world asset tokenization. Even Ripple's acquisition of the prime brokerage firm Hidden Road for $1.25 billion signals a shift toward deeper institutional integration. But there's no victory lap yet. Institutional inertia is vast, and even the best technology must win over risk-averse gatekeepers. The coming year is likely to see more pilot programs, more scrutiny, and perhaps more surprises as banks and governments weigh XRP's promise against their own interests. Now, what does this all mean for you, the investor, the business leader, or the curious watcher at the border of the old and new financial worlds? First, legal clarity is a rare currency in crypto, and XRP now holds it. For investors, this reduces one of the biggest risks: regulatory shutdown. XRP's legal precedent in the US does not guarantee profits, but it does set a foundation that rivals envy. Holding 10,000 XRP could lead to significant wealth if XRP reaches $100 or more, turning holders into millionaires, claims Eduardo Farina from Alpha Lions Academy. That's the promise, the if, that keeps the XRP army holding through storms and sunshine. Second, Understand the real-world use case. Unlike meme tokens or speculative gambles, XRP's story is built on solving a trillion-dollar pain point, the inefficiency of global money movement. Its on-demand liquidity turns settlement times from days into seconds, cutting fees and freeing up capital for businesses and banks. Companies using RippleNet report not just speed, but new competitive advantages in their markets. For entrepreneurs or financial professionals, XRP isn't just a token. It's a potential tool to streamline operations and open up global growth. Third, consider the lessons of institutional adoption. Even with superior tech, change is slow. Swift's half-century dominance shows just how sticky financial infrastructure can be. Early adopters, like some Asian remittance firms, gain an edge, but mass adoption takes time, patience, and yes, more negotiation with regulators and risk managers than most tech enthusiasts would like. Fourth, be wary of the hype. Yes, some analysts forecast jaw-dropping price targets, $100, $1,000, even $15,000 per token, if XRP were to completely overtake Swift, according to DigitalG. But others, like Wallet Investor, see risks and project a much more modest future, with prices even dipping below current levels. The only certainty is uncertainty. As always, do your own research and never invest more than you can afford to lose. Fifth, keep a close eye on geopolitical moves. If XRPL becomes a preferred platform for central bank digital currencies, or if more $10 billion plus asset tokenization projects go live, the network's value and its utility could skyrocket. Conversely, a major regulatory crackdown or technological setback could quickly put a ceiling on XRP's ascent. In practical terms, if you're in fintech, banking, or payments, now is the time to explore how RippleNet and XRPL could improve your cross-border operations. For investors, the next 6-12 months will be decisive. Pilot projects, regulatory updates, and new partnerships could trigger volatility and opportunity. So, to answer the central question, can Ripple overcome regulatory and institutional resistance to make XRP the world's new payment backbone, or will fresh obstacles halt its rise? Here's the bottom line. The old obstacles, the giant SEC lawsuit, regulatory purgatory, institutional suspicion, are starting to fall. Legal clarity has tipped the scales in Ripple's favor, accelerating pilot programs and institutional curiosity. Early central bank and enterprise partnerships signal a growing consensus. The future of money may well include a blockchain-powered bridge like XRP. Yet the path is not clear of risk. New regulations, market inertia, and global power politics could still throw up unexpected hurdles. The next year will be decisive. If Ripple can convert trials into system-wide adoption, and if central banks choose XRPL as their digital foundation, XRP could move from niche to necessity in the global financial machine. If resistance remains, though, XRP could end up a valuable but specialized tool in the arsenal of a few forward-thinking players. And here's a secret fact you might not hear on the trading floor. Ripple's recent acquisition of a high-profile prime brokerage, Hidden Road, puts it in position to serve not just crypto startups, but the world's largest hedge funds and institutional investors. This behind-the-scenes move could be the quiet catalyst that tips the balance, bringing mainstream Wall Street money into the Ripple ecosystem for the first time. So, what's your next move? If you believe in the world's need for faster, cheaper money movement, watch Ripple, watch XRP, and stay tuned. Whether you're an investor, a developer, or simply fascinated by financial disruption, the XRP saga isn't over. It's just getting started. To keep up with the latest, hit subscribe, share this video with anyone watching the future of finance, and let us know your biggest question about XRP in the comments. Will it be the